Welcome to the Metals Investment Forum. My name is Chen. I write a newsletter called What is Chen Buying, basically introduce some investment idea in a different sector, including one of the most important sector is the mining industry. This is my disclaimer. This is for entertainment education purpose only. We don't particularly recommend buy or sell any stock during this presentation. You can read this at your leisure. So let's go to the bottom of this. Okay, we have an election, we have a COVID, and how do we invest? First, this general thing is there's massive money printing. There's 5 trillion on the sideline, probably more now as they're doing more QE, and then recently a lot of funds sold in order to hedge the election, and they collect 0 interest rate. So that actually motivate people to take risk. And so they invest in all the different sectors. This year is, as I passed it, is what we have seen. There are people just chasing, sometimes chasing small stocks, sometimes chasing certain sector like crazy. Okay, and also very important, the Fed is continue to print money. They're going to have an announcement today. I'm pretty sure they will announce there will be more QE. They will try to print as much as they could because there's no stimulus coming, at least in the near term. There are election uncertainties. Today I got up at 4 o'clock, try to check who win the election. Nobody knows. I mean, I just checked before I came here. It's still very close at certain states. Most likely Biden will win, but you know, there's certain factors. Hopefully we'll know it by the end of this week. If it lasts longer, there will be issues on Wall Street, right? People remember 2000. So there also, before election, there's massive hedging by Wall Street. Okay, so Wall Street, they were expecting volatilities after election. They worry about contested election. So far, so good. We may heading to that direction, but small chance. And some Wall Street also worry about massive blue wave, right? The higher taxes and so on and so forth. And that is not materializing. Right? So there is a small path, very narrow path for Democrat to gain the Senate, but it's small possibility. They need Georgia to have another runoff election, so they can reach 50 seats and a presidency to claim. It's a very tight window, Also, we also need to remember we are very close to get a working vaccine. A vaccine against COVID will trigger the rush of value stock. When people buying, just airlines, people buying cruise line, and so on and so forth. All these hotels, all these companies was hit very hard by the COVID, right? And then on the rebound, and those stocks tend to do very well, right? And so that's another thing we need to keep in mind. So there's a lot of issues, right? So and then we're talking about U.S.-China trade escalation, and the most important to watch is U.S. dollar. We assume that there will be, should Biden win the presidency, there will maybe less trade war. But still, if Biden wish to rebuild American industry, U.S. dollar need to go down. I will show you later on at all the different charts. Okay, and so U.S. dollar is clinging on a very important support, and then it may go down. That will be very good news for the commodity, including gold and then many others, gold, silver, copper, you name it. And then we also come into a tax loss selling season. Okay, from United States, it's from the U.S. Thanksgiving, not Canadian. U.S. Thanksgiving at the end of November to Christmas. Okay, there's a tax loss on because there are a lot of people there's certain stock make a lot of money. They just try to reduce the tax bill. So that's also another consideration. So let's take a look. This is the COVID case. Okay, so this is as of last weekend. So actually, it went up a little bit more. As you can see, it's very unfortunate. but the cases are going up. There were lockdowns. Lockdown already announced last week in Europe. So in US, it's very hard to imagine they will go through the lockdown again. But anything can happen. That's investor need to guard against. But again, we are just months or weeks away from a working vaccine. So keep that in mind also. So this is S&P. S&P has been in a close range lately. Okay, this is as of last weekend. And recently, in the past 2 days, a few days, 3.5 days, it's now to the top of the range again, about 3,500. It's very interesting. If it breaks, we can see, could have a Santa rally here. So that's a possibility. So that's a Fed balance sheet. Okay, Fed balance sheet, this is the long term, this is short term, and recently probably continue to go up. Okay, so a lot of people are telling, oh, what's the impact to gold, right? What's the impact to the metals? We can see there's a huge jump in 2008, and now we know gold actually went up a lot, but not necessarily, right? So there's another step up around 2013 and 2014, but gold actually peaked around 2012. So it's not necessary it will be, put it this way, it's not necessarily exactly correlate. Gold may not exactly correlate. Even we believe the Fed balance will go up. They're doing QE, they're doing more QE in Europe, in everywhere else that's impacted by COVID. Gold not necessarily will go up with them, just historically. Okay, so how about gold? Okay, so that's a lot of people ask me this question. The same setting, okay, so the massive money printing, there's a very large size of money on the sideline, 5 trillion or more. And unfortunately for gold, there is also supply-demand issue. And we saw the extremely weak physical demand from India because of the pandemic. Okay, there's a temple, Indian temple, they were talking about selling gold because they need to, people, monk or whatever, they need to operate, they need to eat. So, and then it's against their tradition to sell gold. They try to find a way to sell gold without selling gold. So that's very weak. And then you saw gold traditionally, bull market starting in September because the Indian holiday in October, it didn't happen. So we have very weak demand from India, a weak demand in China. I'll show you later why the demand and picture in China is not very good. And then the central bank is not buying, partly because the COVID issue. Some banks need to sell gold in order to to bring back, to buy food, buy all these demand, medical supply whatsoever. So the one of the issue I always worry about just gold, if just there's no physical demand, the only investor demand, investor can buy gold, can sell gold, and they can trade it, then gold will be more like a Bitcoin. Personally, I don't believe in Bitcoin because Bitcoin is very good at transaction, but it is a good store of value because you wake up one morning, someone can hack your computer and you lose all your Bitcoin, right? So, but then the gold, I see gold can be very volatile in the next year to come. Okay, and now also, if we have a vaccine breakthrough, possibly for weeks, in the next few weeks and months, that could be negative for gold. I mean, I just tell you the negativity. And then for the positive, we have a very strong gold season coming. Okay, on Christmas and Chinese New Year, usually is the strongest seasonality for gold. And on the other hand, okay, gold producers are trading at historically very, very low valuation. Okay, I've been in the mining industry for decades, and this gold, I can say, there gold miner trading at 2 to 3 times cash flow, or maybe 4 or 5 times the free cash flow. We haven't seen this kind of valuation until maybe in 10 years, more than 10 years, 15 years ago in the base metal. Okay, it's like a base metal company at that time. So either gold has to go down or gold miner has to go up. So this is my strategy. Okay, I'm overweight gold producer. Okay, and so also I'm looking more on the industrial demand. Okay, I like platinum, I like silver, even like some base metal, because those demand can pick up if we have a vaccine, we have more stimulus and more government injection, more government guided, their, for example, clean energy and hydrogen fuel cells, so on and so forth. So that's my general strategy, okay? Because put it this way, gold at 1900. Well, of course, we'd love to see gold break out 2000. Okay, even if gold go come down to 18. If you're in the GLD, you lose money from the GDX. If you put a gold miner, you can still make money because they're just so cheap. The gold miners, they're generating so much cash flow. One by one, gold miners I saw, they are generating cash flow, free cash flow, and then they pay off their debt, and then they become cash positive and start paying dividend, and potentially next year we could see share buyback. So that's what in general strategy is more focused on gold producer. And also for trading perspective, I'm thinking one possibility would be usually seasonal peak is Chinese New Year. So maybe we take some profit in the coming Chinese New Year, which is 2021. Okay, so this is gold. Beautiful chart. I just put it down a few hours ago. Actually, today's breakout, if you can see here, it's really broke out the trend line. And I hope this will continue. But again, what I see is gold miners are more, in recent months has been pushed down to very, very low valuation. So if we have a rebound, gold miners should do better. Personally, I not only own gold, I also own gold miners core option ETF like GDX core options. And around when gold at 2000, I was basically selling just to take some profit. So now it looks very good with a strong gold season coming for Christmas and Chinese New Year. This is silver. Silver is, you can see it hasn't really break out yet, but usually it follow gold, okay? And this is a platinum, a similar chart, okay? They haven't really break out yet, but because they follow gold. And then one thing I want to emphasize is that in those metal, when you have a bull market, okay, when there's an investor-driven bull market, anything can happen. In the past few months, we already saw that the silver whale, so-called quote-unquote silver whale, was really a Chinese company. It's automobile parts. They make automobile parts, brake, axle, whatever. And then because of they use steel, they have a trading account, right? They have a commodity trading account, and they bought out all the silver, right? It's become a silver whale. And then it's, it's led by his chairman. Actually, he's a Chinese-Canadian, something. So, and then they bought so much silver. And then when they really have to liquidate, which was huge drop of silver price. So that's the pattern. I mean, I just show you the silver similar when we see the huge drop of silver, because there's when that's an issue when there's a investor-driven market, and so those and then you don't know. There's so many players around the world. You don't know until it happened, right? So there's could be a lot of volatilities in the gold and silver market. So what I see, and also very important we see is U.S. dollar. You can see U.S. dollar is cleaning. Again, this is this weekend, but it's a similar situation. It's cleaning on the important support. And then if we look at long term, right? If U.S. dollar really breaks out, you can see that from early 2000, we have this. Until 2008, we have a huge commodity boom. Okay, if you can see my mouse pointing. So that's the question I have is, would that be a a commodity bull coming. And then I see a lot of this could be driven by the demand, really physical demand. So that's why I like silver, for example, because it's heavily used as solar panel. Platinum is replacing, there's a report, they're going to replace 15% of palladium, which is much, much higher price. And then there also hydrogen fuel cell coming. So those are the different possibilities. And then we also talk about copper. We have a few very interesting copper gold project we can talk about. So I view those can really take off next year. And then finally, we just, there's all these people worry about, okay, well, what if I bought at the top of the gold, right? What if I bought gold at 2000, or is that the top, or will I regret for a decade? Well, let's take a look, okay? So you see, this is at the top of gold around 2012, okay? So there is a very clear US dollar start bottom, yeah, it's about US dollar bottom. And then this is real interest rate. And then real interest rates start to reverse, really. So, and then you compare with what we have now. This is a couple months behind, but it's similar. Yeah, there's no way, very, very, US dollar is weak, right? It's clinging on support, but hasn't really break down yet. And the real interest rate just turned negative. Compared with what we have in 2012, we have long, long way to go. So again, okay, so that's general thesis I have. Okay, so I believe we are in the middle of the bull market. However, I would love to see more physical demand from consumer for the next year. And we would like to see more central bank demand. One of the key to watch is Chinese central bank. They haven't published they stopped buying gold, but there's some rumor maybe they're secret buying gold, right? Because there's import data from China. Actually, there seems to be gold importing into China. While China is China gold is trading at a big discount to international. So it doesn't make sense to import unless someone secret buying gold. We do not know. Those things you do not know. You only learn it after the fact. So these are all these are speculations. Finally, I just want to my investment philosophy, especially in this bull market, there's many pump and dump in the junior market. Okay, and then for us investors, we need to be very careful about those zero-sum games. So we just put money in, and then when you sell, it has to be other expense, right? So you are the smart money you send to other people, and then let them screw them. Okay, so those trades we need to be very careful. We want to have something that we can look back in the next 5-10 years and look like a good project and a successful project going forward. Okay, so this is my philosophy. We only have 2 minutes left, so I like to spread around. Okay, have a different invest in different things. I invest in future, in gold producer, in juniors, and so on and so forth, and also different sectors like biotech, energy, and so on and so forth. The idea is you take calculated risk, and some area you make a lot of money at a certain time, and then you can balance them out. Okay, so you have more wins and losses, and also at the end, I want to have for investment, as an investor, we want to have a better future for the mankind. Okay, that's why we invest. It's not just try to pump and down, promote some stock and screw someone else. That's why I feel pretty strongly. So I was asked about hedging. I usually don't hedge. This year only hedge palladium, which was very lucky. Okay, I hedged it, and then it collapsed around the March period. So this is the gold and the gold seasonality. That's what I'm saying. There's a very little seasonality because China's gold usually trading at premium, which means gold going into China, now trading at discount. It's still trading at discount lately. I watched, this is a few months old. I checked like this every week. I still have a 30-40% discount. Okay, silver is started breaking out, looking very good. And then copper looks very good. Copper and zinc, they all come back at the historical. And then we just last minutes. They just, we have time, we can go through that. So most buying is really from US and EU, and Indian China really hasn't wake up yet. And then we, for the juniors, miners is the stock pickers market. Okay, and then this is my website, chenpicks.com.